Hi, I'm Ryan Campbell with John Deere. I'm the president of the Construction and Forestry Division, and you're watching Taking Stock.
Counting down to the close, today is Monday, December 15th, and this is Taking Stock. I'm Ashley Mastronardi. Lots of news moving the markets today. Stocks slipped Monday as pressure on AI names weighed on the broader market. The S&P 500 dipped after an early gain, and the Dow also fell. AI stocks felt the dip. Investors rotated into economically sensitive sectors such as consumer discretionary, industrials, and healthcare. Looking forward, economic data could set the tone this week. November non-farm payrolls and October retail sales are due Tuesday after delays from the fall government shutdown. Economists expect payroll growth to slow sharply to about 40,000 jobs, down from 119,000 in September. Later in the week, the November CPI report will provide another key inflation reading. Today on Taking Stock, we're catching up with David Bellinger of Mizuno and Ron Santanella of Equitable Shares, plus more coverage of Solana, Breakpoint, and Abu Dhabi. And the latest for Money 2020, Scarlett Sieber. And now it's time for the bell. Josh, the prompter is the prompter. Of course, we wait for that 15-second bell and the 3 gavel bangs. The S&P 500 is down fractionally. The Dow Jones is also down fractionally. The New York Stock Exchange Composite is up about 0.1%, and the Russell 2000 is also down almost 1%. Joining us now is David Bellinger, Director and Senior Analyst at Mizuho. Welcome to the show.
Great, thanks for having me on.
All right, so what are you seeing from consumer names today?
Yeah, I'd say in my space, I cover 18 names in the consumer space, and pretty mixed today. No real outsized moves. It's more of investors waiting for these holiday data points to come through, and there's been these sort of higher highs and lower lows between these peak periods of consumer spending. So I think we're in that right now, but today's stayed pretty mixed in the consumer space with no real outside movers today.
Can you talk more about those retail data points that we're waiting for?
Sure, so we'll get an updated monthly sales number here for consumer spending. That's been a little choppy, I'd say, lately, but still overall pretty constructive in our view on the consumer. One thing that we keep in mind here is that there's all this talk of inflation being incredibly high and leading the consumer to be very choiceful. And we've seen more of that in our data and our tracking, some of the credit card data we look at. And also I'd say that one key item that I think people overlook is you've got national gas prices under $3 a gallon right now, so that's a helper in light of all this inflation. But all the data we've seen and through the Black Friday, Cyber Monday period, we think the consumer spending's held up pretty well to date.
What is your holiday retail outlook?
Yeah, so it's honestly more of the same. So it seemed like the Cyber 5 Black Friday period was fine. A lot of that revenue growth was driven by higher ticket, higher inflation. The volumes are a little bit slow, but that's nothing out of the ordinary from what we've seen throughout the whole year. But yeah, again, somewhat mixed, but still constructive here, and we don't think this will be a bad holiday by any means, but not a great one either. So more of just okay, but not great is the way we'd characterize it.
We have October retail data coming out tomorrow. What is your expectation?
Yeah, so we don't have a formal number. We tend to look category by category. And again, this is more of the same. This year-over-year growth, we strip out some of the gas noise in there because that's volatile, and then motor vehicle sales are big ticket. But under the surface, it seems like spending growth has been in this +3, 4, 5 range. It's been anchored to the middle of that for the past few months. So we honestly think it's more of the same and maybe a little bit of a lull period before the bigger spending that comes in December.
All right, and what is your outlook for the retail sector in 2026?
Yeah, so we've got all these questions spiraling out there. Recession we've heard about for years. Could the consumer weaken? Could it get stronger? So it's very preliminary views now, but we do think that the spending is very bifurcated, right? We've had the low-income consumer under pressure for a while. It seems like the bulk of spending is being held up by that mid to upper income consumer. We haven't seen the pressures move upstream, so that upper income consumer is still doing well. Names we like included Walmart in there. We've seen a lot of trade down, seen this membership activity. We think they have 20 plus million members on their Walmart Plus program, so that's a name that can do well in a good economy, a bad economy, and we continue to like Walmart as they also have these other accretive alternative business lines coming into place now.
Any other stocks you're looking at?
Yeah, a couple I throw out there. Chewy is one we really like. Very good Q3 numbers last week. The stock was down a bit though. We just think investor expectations were a bit elevated, and there's really nothing wrong with the business. We think they regained the momentum, and that continues to do well through 2026. And then another one is Wayfair. That's been an e-commerce name. It was a bit under pressure with the tariffs. That stock's come back really sharply, but we do see another leg higher for that name. Having the housing market come back a bit will certainly help. We're looking for not necessarily a big drop in mortgage rates, but that'll help, and just a sequential improvement in the housing market. You get a lot of this turnover activity and sort of like a refresh cycle in the home furnishing space. That'll help Wayfair a lot.
And what do you think consumers should be keeping in mind as we ramp up into the holidays?
Yeah, it's inflation's the big word, right? That's always hanging out there. We think the consumers handled it pretty well, and a lot of the media headlines around 25% tariffs. We were north of 100 for a while in the China tariffs. So as we haven't gotten these massive price increases, they've been pretty steady, but we haven't seen price increases to that magnitude. So as some of these companies work through these, Home Depot, Lowe's, Tractor Supply, they've mitigated these really well, even at Costco. So I think the consumers have been braced for this, but we haven't seen a massive downdraft in spending.
All right, David Bellinger from Mizuho, thank you so much for joining us.
Great, thank you.
On Taking Stock. Okay, Josh, let's go. Howie, let's go. Let's take a walk. We are, excuse me, sorry. We are heading to our NYSE Notables. It's always an exciting afternoon and morning here at the New York Stock Exchange. We ring the bell twice a day. We ring the opening bell to open the markets at 9:30 a.m. and then the closing bell, of course, is at 4 p.m. And as we approach the holiday season, we are going to focus on two big names in retail. First, we have Abercrombie & Fitch, ticker symbol ANF. Abercrombie & Fitch shares surging more than 5%, almost 6% today, as investors reward a strong turnaround story in consumer retail. The stock climbing above $118 with confidence building around the company's brand revival and execution. It is really resonating with the consumer. Abercrombie posting solid fundamentals, double-digit operating margins, strong profitability, and a return on equity north of 40%. Revenue growth remains robust, and the balance sheet shows healthy liquidity with modest leverage, and the valuation is also turning some heads, trading at a price to earnings multiple well below its historical average, even after its recent run. Next, we have American Eagle Outfitters, ticker symbol AEO. American Eagle's shares surging again today as investors continue to reward a strong earnings story and a more confident outlook. The stock is up more than 6%, extending a powerful year-to-date run as bullish options activity and positive sentiment drive momentum. Okay, we are going to a package now. On Saturday, FinTech TV contributor Rachel Pether sat down with Iman Modamendi of Solana Labs at Solana Breakpoint in Abu Dhabi. Let's take a look.
Hi everyone, we're here at Solana Breakpoint and I'm joined by Iman Modamendi, who's the head of Solana Incubator at Solana Labs. Iman, thanks so much for coming.
Thank you for having me, Rachel. Really happy to be here.
So let's just start with some basics. Tell me a bit more about Solana Incubator and the programs that you run.
Yeah, so Solana Incubator sits within Solana Labs. As a lot of folks know, Solana Labs built the original validator client, a lot of the original products and protocols of the network. But as the network has grown, as all these amazing developers have come in, we asked ourselves, how do we scale the knowledge, the expertise that we've built up over the years across the ecosystem to hopefully propel the next blue chip company to get created on Solana, the next Phantom, the next Jupiter. And that's really where the incubator came from, where we work with 4 to 6 teams at a time, a very small group of teams. We bring them to our New York office for 3 months, and it's really hands-on collaborative, trying to propel them forward to create this next major company on Solana.
And so there's so many things that we could unpack there in terms of like what you look for. Maybe we start off with what you would look for from the actual product perspective or the idea perspective.
I think the thing that we care most about is first and foremost the team. Are they a team of technical founders that really care about the product that they're building? Do they have founder market fit around what they're doing? And then are there people that we want to enjoy in the office? You know, are they friendly? Are they going to get along with the rest of the cohort? So I think that's a big piece of it on the idea side. And then the second piece of it is it something that we believe can be transformational for Solana? Something that's really pushing the network forward, something that we haven't potentially seen before. And the third piece that we care a lot about when we think about the ideas that we want are they actually things that can drive sustainable businesses on Solana?
And so without giving away too much information, I know you've just closed your next cohorts, so maybe not a sneak preview into what some of the ones are coming up. But staying for a little bit longer on the founder piece and the teams piece, how do you then train them or take them to that next level? Because obviously being a startup at early stage is different to taking it then to the
100%. And I will say, so we actually recently announced cohort 4 applications. So if people are interested, they can still go ahead and apply. I think the application deadline is December 19th. So if folks want to get their application in before then, they're able to. But I think the way that we help startups is really 3 pieces. The first is kind of this build alongside Solana Labs experience, where we offer the full bench of personnel that we have to really jump in and support these teams. But what does that mean? So we meet with every team on Monday to understand what are the things, the major challenges you have going on that week. So for one team, they might say, we're working through user experience design this week, and we'll bring in the head of design at Solana Labs to jump into their Figma to leave feedback on what their design is. Another team might say, we're working through our marketing strategy. So on a Monday, our head of marketing might go in, talk to them about what they're trying to do. Maybe on Tuesday, we have a document that we're working through with them. And then on Wednesday, we're actually thinking about how to execute that strategy. And so it's really hands-on kind of building alongside Solana Labs as that first piece. The second piece is what I think about is all of the traditional Y Combinator type elements, where we have office hours, workshops, speakers, dinners. We have about 90 of these types of events per cohort where we bring in really high quality folks, whether it's this past cohort, we had the founder of Venmo come in, the founder of FanDuel come in, we have Rajan Toli come in every time. We also bring in all the major VCs, the capital allocators. And so you really create this experience of being at the nexus of the Solana ecosystem and getting to meet with some of the top folks. And then I think the final piece is what I think of as the cohort camaraderie, where you're in a room building with the top founders in the ecosystem, back to back with them. Above you, you have Solana Labs, Solana Foundation, and On's on that floor. Below you, you have the ecosystem floor. And so many positive synergies have come from that, where we've had companies in the cohort partner with each other. We've had some founders go and join other companies within the cohort. And I think what we always hear from teams is it really feels like a family. And so I think that's the final part of the experience that really brings it all together.
That's great. I mean, it's excellent what you're doing. Very excited to see what comes out of cohort 4. So thank you so much for hosting us here at Solana Breakpoint.
Of course.
Coming on the show.
Thank you so much for having me, Rachel. I appreciate it.
Thanks, Elon.
Time now for a few fintech, crypto, and AI headlines. The crypto majors of Bitcoin, Ether, and Solana all down multiple percentage points on the day as the markets await that key economic data we talked about earlier in the show. Next up, JP Morgan is launching a tokenized money market fund on Ethereum, seeding the vehicle with $100 million as Wall Street accelerates the move to bring traditional finance on-chain. And finally, Visa is launching a stablecoin advisory practice to help banks and businesses build, test, and deploy stablecoin strategies as institutional adoption accelerates. And now in our continuing coverage of Solana Breakpoint in Abu Dhabi, FinTech TV contributor Rachel Pether caught up with James Zhang of Jumbo. Take a look.
Hi everyone, we're here at Solana Breakpoint in Abu Dhabi. My name is Rachel Pether with FinTech TV, and I'm joined by James Zhang, who's the CEO of Jumbo. James, welcome to the show.
Thanks for having me.
So you have had quite a journey of late. Jumbo has already reached millions of users in 128 countries, I believe. So tell me, how have you been able to scale so quickly?
Yeah, no, I appreciate it. As of today, Jumbo has over 1 million phones sold, created over 10 million wallets. And I think the key is honestly distribution, which is what the company and the team has lived and breathed. Jumbo is essentially building out the mobile infrastructure for all, and starting with the Jumbo phone, the $99 smartphone that comes pre-installed with Web3 apps that provides a gateway access for users into the digital asset economy. We constantly talk about how to onboard that global next billion users. Well, I don't think it might be from on-chain warriors, but it might come from the global south.
And so talking a bit more about the global south then, tell me about the philosophy behind setting up Jumbo.
Definitely. Well, I grew up personally in Congo and Central Africa, family's third generation there. And when you grow up in a region like this, you realize cross-border payments, banking the bank, remittances, you take this for granted. When I came to New York for school, and you realize that all these legacy gatekeepers could be solved with Web3 Rails. So we essentially wanted to build something where users could get banked, could essentially have transactions and pay cross-border to other folks.
And so how are you seeing the divergence or distribution across emerging markets then?
Definitely. I think the largest markets for us right now that we're seeing is LATAM, Africa, and Southeast Asia. And Jumbo Wallet and the Jumbo D App Store is essentially some of our main onboarding portals, where we think of ourselves as a neobank, and the Jumbo phone is actually the onboarding tool, where right now, unfortunately, the region has skipped through the PC age and it's directly in mobile. But unfortunately, if you have anything stablecoin rails or payments related that touches crypto, it's honestly very hard to get into the walled gardens of Google and Apple. So for us, it was important to create this app store, decentralized, where users can reach progressive web apps that have come out and directly access it through our phone.
So do you think of yourself as a hardware company, software company, financial inclusion company, all of the above? How do you see yourself?
I think in the first year of business, we're like 80-20 hardware versus software in terms of revenue. But as of today, that's completely flipped. And I think that's a function of all of our partners and creating a larger D App Store, where right now we have over 60 partnerships, anywhere from some of the largest distribution players, like centralized exchanges such as OKX and Bybit, and Coinbase, to L1s like Solana. We're here at Breakpoint, where most of their products and payment rails are integrated. And the largest player in emerging markets that we see is Tether. So USDT, SPL payment rails on Solana has made everything in our phone a lot quicker and easier for our users.
Excellent. And what are the next steps for you, and how are you looking to perhaps incorporate AI into what you're doing?
Most definitely. I think the most important part is that people don't realize how accessible today AI is and important in everyday usage. You see most of the products at Breakpoint, they're all including AI, whether it's a co-pilot, etc. Well, in the emerging market space, it's very hard to actually access ChatGPT AI. So within the Jumbo phone, we have Jumbo GPT, where it's paid for and users can directly access AI, where we think of it not as a tool, but as a financial co-pilot for users, where to help them make financial decisions and everyday lives.
Incredible. Well, I love your own personal origin story and the origin story and the growth of Jumbo. So can't wait to hear what you have in store next. So thanks so much for joining us.
Thank you for having me. Appreciate it.
Great.
Welcome back. Today in Startups Raises and Rounds, first AI DevOps firm Harness landing $240 million at a $5.5 billion valuation as demand for automated testing and deployment surges. Next up, Naveen Rao, the ex-head of AI at Databricks, is raising $475 million. That puts it at a $4.5 billion valuation for his new startup, Unconventional AI, to build a more energy efficient computer for AI. Finally, Bedford Ridge Capital is leading a $100 million investment into Israel's Quantum Art, backing its push to build next-gen quantum computers as the startup targets 1,000 physical qubits by 2027. I am joined now by today's closing bell ringer, Ron Santella, CEO and founder of Equitable Shares. Welcome to the New York Stock Exchange.
Ashley, thanks for having me. It's a pleasure to be here today.
All right, so this was your first time ringing the closing bell, your company. What did that moment feel like for you?
Felt great for a couple reasons. My twin brothers rung it twice, so now I can say I rang it at least once. But having your own company and your own ETF and ringing the bell is just special. And there's no place that we'd rather be than the New York Stock Exchange. It's iconic, the history here. So yeah, just tremendous feeling to have my whole team here and 40 guests today.
Can you tell us about your firm and tell us about this ETF offering? I realize it's a first for you.
Sure. So the firm's 8 years old. We're based in Naples, Florida. We specialize in hedge strategy. We've done a fair amount of customized hedging for individuals. The ETF is our flagship product, HEDG, Hedge. It's a hedged equity product in the S&P 500, about 6.5 years old. But we converted from a mutual fund to an ETF in October this year. So hence the new launch of the ETF.
Why did you convert from a mutual fund to an ETF?
I think we just identified that it's been a secular trend now for a couple decades that ETFs have continued to take share away from some actively managed strategies. As you know, there's over $14 trillion now in the ETF space. And the last couple of years, I think that momentum has picked up, and it just seemed like it was the right move for our investors. And it was really just a client-centric decision on our part.
Who is the target investor for Hedge?
I like to draw an analogy to anybody who owns a house and has insurance. Like if you own a home, you have homeowners insurance. Our product, or a product like ours, should be in everybody's portfolio. We're going to perform reasonably well in up markets. We've annualized at double digits over the last 3 years. But when the market's flat or when the market goes down, you're going to sleep better at night. So for me, the target audience is anybody who wants exposure to the S&P 500, albeit at less risk and a lower volatility.
What are you focusing on? Is it mostly large caps? Is it S&P 500 stocks?
Yeah, so we're a beta player in the market. We own 2 ETFs, SPY and IVV. We want it to be a pure play on the market. We're not stock pickers. And then we're doing a systematic hedging program around that every 90 days to reduce the risk of the underlying market.
And how does Hedge fit into the current market environment?
You know, I like to think that it's an all-weather fund, and so whether the market's been up or down, Hedge has done well. But I think currently, you know, we're coming at the end of 3 years of strong performance in the market. We've had 2 years over 20%. The market's up about 17.5 through Friday of last week. I think as we go into 26, some people are just thinking about how do they get a little more defensive or lower volatility. So we're seeing more interest in our product.
All right, what is next for your firm?
One is just to get focused on Hedge. We've grown 20% since we listed the product on October 13th. So in 2 months, we've grown quite a bit. Number 2, we expect to roll another ETF out sometime in 2026. That's similar to Hedge, but maybe on another index.
All right, Ron Santella, CEO and founder of Equitable Shares. Thank you so much for joining us at the New York Stock Exchange, and congratulations on ringing that bell.
Thank you, Ashley. Thank you for having me.
All right, after the break, the latest from Money 2020's Chief Strategy Officer, Scarlett Sieber. Don't go anywhere.
Welcome back. I am Scarlett Sieber with Money 2020, and here we have our next segment of Hindsight 2020, where tech history gets the glow up it deserves. Today we're going to be rewinding the clock back to December 12th, 1980, the day Apple bit into Wall Street. December 12th, Apple goes public at $22 a share. Back then, Steve Jobs was rocking a bow tie, and the Apple logo had more colors than a Lisa Frank notebook, but I'm guessing that most of you probably won't even get that reference. Shout out to my 80s babies. But this Apple IPO, it was the start of something huge. Apple's debut created over 300 millionaires overnight. Silicon Valley went from being nerd central to investment hotspot. Suddenly, tech wasn't just for the hobbyists, it was Wall Street's new obsession. Fast forward, Apple becomes the first $3 trillion company, people. AirPods are everywhere, and your iPhone is basically your bank, your camera, your therapist. All because of one IPO that turned garage dreams into global domination. So yeah, December 12th wasn't just about rainbow logos, it was the day tech became the hottest asset class in the game. So that's all we can say for you for today. Until next week when we find another plot twist that proves history loves a remix. Back over to you.
Welcome back to Taking Stock. We are about 30 minutes from market close. The S&P down fractionally, as well as the Dow. The New York Stock Exchange Composite is up more than 0.1%, and the Russell 2000 is down almost 1%. Tomorrow on Wall Street, big day for data. November non-farm payrolls and October retail sales are due Tuesday after the delays from the fall government shutdown. Economists expect payroll growth to slow sharply to about 40,000 jobs. That's down from 119,000 in September. And later in the week, the November CPI report will provide another key inflation reading. You can catch NYSE Live tomorrow morning at 9 a.m. with Kristen Scholder. She will be counting you down to the open, and I'll be back tomorrow filling in for JD Durkin, counting you down to the close. We will see you tomorrow on Taking Stock.
Woo! Yeah.